My client almost got hit with a $1.5 million tax because of their plan to move crypto into an LLC. Here's how we fixed it. In this video, I want to walk you through what a lot of practitioners get wrong about putting crypto into an LLC. Most assume you can just load up any asset into an LLC and it'll be tax neutral. That is not true. Especially with digital assets, the LLC structure and how you fund the LLC can immediately trigger draconian tax consequences. I'm going to break down 4 things. Why the rules under sections 721 and 351 trip up crypto contributions. What happens to your tax exposure once the assets are in the LLC and you start doing activities like staking or DeFi, and the stablecoin trap that creates microscopic gain recognition events you have to report, and what happens when you bring in a service partner or use an S-corporation election. Let's start with the contribution into the LLC itself. When you load crypto into an LLC, especially when that LLC is not disregarded for tax purposes, that load into the LLC can trigger immediate capital gains tax recognition. The reason is that crypto does not have a defined federal tax characterization for IRS purposes. Consequently, you might accidentally implicate the rules under Section 721 and Section 351 of the Internal Revenue Code, and that causes immediate capital gains tax recognition on transfer into a partnership. That's the basic trap. You contribute appreciated crypto into an LLC, and the sections activate because of the crypto's ambiguous classification. Then you owe capital gains tax, even though you didn't sell anything. Once the assets are inside the partnership, we start implicating the rules. But setting partnerships aside, crypto tax gets only more complex from there. If you're going to be doing any activities at all with crypto, staking, lending, diversifying, you immediately have additional consequences. For example, in some yield transactions, which are a category of DeFi transactions for crypto, you might implicate Section 1058 of the code. While we have some federal legislation proposing how to address a few of these issues, the legislation is in process. The legislation is in the kitchen. It's not yet fully baked, so we don't really know how this is all going to come out. Now, the third trap, capital gains recognition on acquisition. When you buy digital assets inside of an LLC, you might actually have to buy a stable coin first before you can purchase the asset you actually want, your target. And that stable coin disposition, getting to your target coin, immediately causes a capital gains tax reporting event. And people lose those basis records all the time. They lose the record of the delta between the purchase price of the stable coin and its value at the time of disposition. Even though it might be 1/100th of a cent, you're technically required to report it until the IRS gives us a de minimis exemption, or until Congress passes a law giving us a de minimis exemption from this reporting. The fourth trap here involves bringing in a partner to an entity holding cryptocurrency. If you're putting assets into an LLC and then give an interest to somebody else, maybe for their services, you will have additional tax consequences. Income to that new service partner, for example, is the biggest consequence. And when you give away an interest, they've got to actually report that income. And if you have a service partner, somebody putting services into the company in exchange for a share of the company, that is reportable income for them. Any partnership with this money partner, service partner makeup has to be structured very carefully so that this income to the service partner doesn't cause them issues, especially cause them phantom income problems. I've even had clients put crypto into S-corporations, and you might be able to get it into the S-corporation tax-free, but anytime you pull it out of that, you'll have capital gains tax recognition under the corporate tax disposition rules. I strongly recommend not holding any crypto in a company with an S-corporation election. There are abundant and potentially costly reasons to be sure that transferring digital assets into an LLC is effectuated very carefully. If you're holding serious digital assets and you want to get through this right the very first time, visit the link in the description below. You'll find an article where I break this down in more detail, or you can reach out directly about your own situation.